More homes are being listed for sale. Will home prices drop? We're going to find out in today's video. Hey, what's going on, everybody? This is your daily dose of real estate. My name is Lewis. If you're new to the channel, please hit that like button, hit that subscribe button, and consider leaving a comment. The comments really help me as well as others learn and grow. And without further ado, let's jump right to it.
Housing starts this week, weaker than expected. Single family starts hitting the lowest level since October of 2021. You can see that behind me here. Yesterday, mortgage purchase applications fell to the slowest pace since May of 2020, going back 2 years now. Homebuilder sentiment, the weakest since June 2020. All components seeing declines from April. New home sales missed estimate by a wide margin, while the previous month was revised lower. That really woke everybody up. And then today, pending home sales dropped to a 2-year low in April, the 6th straight monthly decline. So does all of this indicate a major cool down ahead in what's been a red-hot market?
The cool down in sales is being seen in the real estate market by the metrics that we track, and that is the number of homes available for sale to buyers has increased, with buyers a little bit choosier as costs are rising and more sellers trying to take advantage of the hot real estate market. We're seeing the number of options available to buyers increase for the first time in the last 3 years. Now, to put that into context, we're still at a much lower level than we were before the pandemic. So the number of homes for sale is still relatively scarce, but this is the first time we've seen a substantial increase in the last 3 years. And so the market is shifting in a big way.
So a couple things that I just want to reiterate. Interest rates are up a little bit. Housing prices are still higher than they were last year. Even though we have started to see some price reductions, they are not down dramatically. It is just starting to balance out the market just a little bit. We still have more buyers than there are listings available. So there's still big demand. However, sellers are starting to rush into the market. They are wanting to capitalize on the amount of equity that they've built up over the last few years. And that's to be expected. We don't know is that just the seasonal shift that we normally see, because as we go into the summer, that's generally when you see more homes actually hit the market. So we'll have to monitor the trend to see if we see kind of a flood of inventory. But to her point, inventory is still far lower than it was pre-pandemic. So I actually covered pending home sales in another video, but just take a look at this map here. So pending home sales are down 4.3% in the West, they're down 4.7% in the South, and they are down 16.2% in the Northeast. The only region that pending home sales have actually increased is the Midwest, which is up 6.6%.
So we know sales activity is slowing, inventory is coming up somewhat. Are prices going to drop?
We know that prices are now higher than they were. They've risen pretty much consistently over the past 10 years. That's a big, huge run up in prices. Last year and the year before, lower mortgage rates helped cushion the blow of higher prices. So buyers could navigate those higher prices with no problem because actually monthly payments were dropping even though prices were rising because of lower mortgage rates. Fast forward to today, and we're in the opposite environment where mortgage rates are rising, adding extra pain to the cost of higher housing. So we're seeing that buyers are under a lot of pressure right now. Monthly costs for the typical mortgage are up 50% relative to a year ago. That's causing buyers to think twice before jumping in and slowing the overall sales pace.
Yeah, she makes such a good point there. I've seen a few people that alluded to the fact that home prices went up due to demand and the pandemic, but I would actually make the argument that home prices shot up dramatically because of the low interest rates. And those low interest rates have actually made housing cheaper overall. But now that we've seen prices go up dramatically and then we've seen mortgage rates go up dramatically, the cost to own is up about 50% from where it was just about 6 months ago. And that really makes an impact on anyone that is looking to purchase in this market. It's particularly squeezing first-time home buyers who have yet to participate in this market, especially when you're starting to look at the overall inflation in all of the costs of goods and services as well. A lot of people have not seen wage growth that mirrored the inflation levels that we are seeing. So everything is getting more and more expensive in real terms.
Home price growth hasn't slowed down that much, especially on the asking price side of things, where actually sellers are asking for higher prices. Homes continue to sell quickly. And as I mentioned, even though we're seeing the number of homes available for sale grow, it's still much lower than it was before the pandemic. So the housing market is still very competitive, but we are seeing signs that the winds are changing, shifting back in a buyer-friendly direction. And interestingly, because 72% of sellers are also planning to buy a home, what's good for the buyer may also surprisingly be good for the seller.
All right, so there you have it. Even though we are seeing increasing levels of inventory, it's still far less than pre-pandemic levels, and there is still a large buyer demand out there. So based on the information and data, it is not likely that prices are going to be dropping substantially from where they are today. I think in general, there's a couple things that would have to happen if we're actually going to see a massive amount of price deflation in real estate. One, I think mortgage rates would have to go up dramatically, and two, we'd have to see a lot more inventory actually hit the market. Just broadly speaking, I think we have somewhere around 2 months worth of inventory nationwide. That is still very much a seller's market. We would probably need to see 6 or 7 months worth of inventory for it to change enough to become a buyer's market. But to her point, buyers are just being way more selective and way more picky because they know that when they purchase this home, they're most likely going to need to be in this property for an extended period of time. Anyway, that is all that I have for you today. Thank you so much for taking the time to watch. Please hit that like button, hit that subscribe button, leave a comment, and we'll see you on the next video. Take care.